Hey, what's up guys? My name is Daniel Lopez with Invest in You Finance, and today we are going to be talking about credit. But first, what is credit? Credit is the ability to borrow money with the understanding that you are going to pay that money back. So why is credit important? Well, credit is important because if you're gonna buy a house or buy a car or purchase furniture or buy anything, you are going to need to have good credit to get the best interest rates. And you're going to want to get the best interest rates so that way you can pay the least amount of interest. If you're going to buy a home, having excellent credit will definitely help you have a lower mortgage payment. Because if you're buying a home and you have bad credit or your credit score is not so good, you may be charged a higher interest rate. If you have a higher interest rate, then your payment's going to be a lot higher. This is why it is important to have good credit, because if you have a good credit score, that means that you pay your money back on time and you pay your bills on time, and all the money that people are lending you, you're paying it back. But if you have a bad credit score, then that means that maybe you're not responsible, you borrow money, and maybe you're not paying it back when the money is due. So credit score, it's like how a bank categorizes you as being a liability to them. If you have a low credit score and you're going to get a credit card, then the bank is going to say, okay, yeah, we'll lend you this money, but you're going to have a high interest rate. And by having a high interest rate, ultimately, you're going to end up paying a lot more money on that credit card. So it's very important to have a good credit score. When you're 18, you want to get a credit card. And the reason you want to get a credit card is because you want to establish credit as soon as possible. I've seen a lot of people where they pay cash or they use their debit card and they want to go buy a house. And when they go buy the house, they might have to get a cosigner. And a cosigner is someone who signs the loan with them, and the bank says, hey, if this person doesn't pay, then we're going to come after you as well because you are helping this person get the loan and we're going off of your credit. So it's very important to establish credit as soon as possible. When you're 18, I would highly recommend that you get a credit card to establish your credit. However, like I said in my other videos, school does not teach you about money. It doesn't teach you about credit. It doesn't teach you anything about finances. So it's very important to learn these things on your own or to watch videos, do research and things like that. Because if you're 18 and you open up a credit card, a lot of people think, hey, I got a credit card. It says my limit is $2,500. Let's go spend that money. Well, you're gonna have to pay that money back. And if you don't pay it back, you're gonna be charged a high interest rate for not paying back the money that you're borrowing. So that's why it's important to pay off your credit card every month when the payment is due. And I can't stress how important credit is. For instance, we're renting a house right now. You have to have good credit in order to rent the house. A landlord is going to look at your credit and say, hey, this person has good credit. I think it would be okay to rent this house to them. Or, hey, this person doesn't have good credit. I will probably have to see who else is on the list and which person has better credit. Luckily, we have good credit. I pay my credit card statement on time, and that's how I'm able to rent this house. Banks look at this and they're like, okay, if you have good credit score, yeah, we'll lend you a lot of money. And I mean, they'll lend you a lot of money if you have good credit. That's why it's important to establish your credit. You can buy a house, you can get personal loans, business loans, and different things like that. You always want to pay your bills on time. You always want to do everything the right way. I know sometimes things happen. You might lose your job and you might not be able to pay these things. But you have to be able to have a plan in place. And the plan is you have to have money saved up for an emergency. That's why everyone says, hey, you have to have 6 months of your expenses saved up for an emergency plan. Because if something happens and you lose your job, you need to be able to continue to pay your bills on time. That would be another thing to have, an emergency fund. I was not a believer in emergency funds initially, but now that I'm financially independent and now that I'm basically living off the money that I've saved up, I think emergency funds are very important. If you are thinking about investing, I would highly recommend that the first thing you do is have an emergency fund. Once you have an emergency fund, then you can go get a credit card. And if you have a good, stable job, then you can use that credit card to pay for everything. The way I do it is I get my credit card and I use it to pay for all my bills and all my expenses. Whatever allows me to use a credit card, I use my credit card to pay everything off every month. Then when the bill comes, I make sure to pay that credit card bill full every single time. The full statement, however much I owe, I make sure to pay that every single time. So that means I have to have money in my checking account to pay that credit card statement. This is just an important building block, important foundation to have. You need to have good credit. You need to have an emergency plan or emergency fund. And by having these things, it'll make you feel a lot better if the worst case scenario happens. You lose your job, or you get an accident and you can't work, something like that. So that's why it is important to have good credit and an emergency fund. Good credit, I can't stress how important it is. I have refinanced my truck, and because I have good credit, they've given me a low interest rate. I am a person who likes leverage. I like using other people's money or the bank's money to make me money. Because if you have a business, or if you're starting out selling products, or you just need to get cash, having good credit allows you to do this. If you want to start up a business and you have a business plan, you're gonna make money, all you need is an initial lump sum of money. Having good credit can get you that lump sum of money. Then you can build your business, and then you can pay that money back because you borrowed it to start your business. Well, you can also borrow it to buy a house and buy a car. But like I said in my other videos, if you're borrowing money, if you're going into debt, because borrowing money is going into debt, you don't have the money and you're borrowing it, so automatically that's debt. The credit card companies, they want you to get in debt. They want you to use the credit cards. They want you to charge, and then they want you to make the minimum payment. By you making the minimum payment, they know that, hey, they got you. You are going to owe them for a very long time until you get out of that debt. But if you use it the right way, if you use debt and if you use credit and if you use leverage the right way, you can make a lot of money. Because if you're starting out, let's say an eBay store, or you're starting out selling online or selling on, Mercari or wherever, you are going to need inventory. And to get inventory, you're going to have capital. If you don't have capital, if you don't have money, then you're going to have to get a credit card. And a credit card will let you use that money to buy your goods that you need to sell, to then make money, to then pay them back. If you can't pay the money back, then that's when things start going south real quick. Because you can't pay the money back, then the bank is going to increase your interest rate. The bank is going to exponentially compound interest, the money that you owe them. And just like compound interest can get you rich and make you a millionaire by putting money in, it's the same thing. It can get you in a hole, in a ditch, by owing a lot of money to the banks, because they tack on a high interest rate, and that $1,000 that you borrowed turns into $1,200, then it turns into $2,000, then it just keeps snowballing until you owe them so much money. So please guys, establish credit, but pay off your credit card every month. Get a credit card, use it, and hopefully that'll help you establish your credit score. Then whenever it comes time to buy a house, you'll have good credit. When it comes time to buy a car, you'll have good credit to buy a car. Credit cards are just like a tool that can help you become financially independent. If you know how credit works, if you know how leverage works, if you know the system, then you can use the system to make you money. I'm not going to talk about it in this video, but I'm going to make another video on how I live financially independent on credit cards. You have to have good credit, and you have to have a good history with the bank, so that way they can lend you money. So this is why credit is important. I hope you guys have credit cards, and I hope you guys pay off your credit cards every month. This video is just like a foundation, like a base that's gonna lead into another video that I'm gonna show you guys how I live with my credit cards. Anyways, guys, I appreciate you guys watching. Take care, take it easy. Please smash the like button. Please subscribe. Check out my other videos. I appreciate you guys for chiming in. Thank you so much, and take care.